and then of course we can start the panel. Just a quick few guidelines for the audience here. Please, if you have any question at any point in time, please feel free to use the chat or raise your hands. We will moderate the questions accordingly. My name is Vishnu Priya. I lead export community at Razorpay Rize. Basically, Rize is a charter by Razorpay, which focuses on initiatives which are completely founder-focused and founder-led. And cross-border community, is something we have recently launched and we're recently focusing on, because cross-border is a huge market right now for India. And which is why we thought that this subject comes incidentally, right at the time when we launched the community. It is super topical for everybody here on the call. And we thought, why not bring in the best experts from the community to be able to moderate this and to make sure that everybody understands what these changes are and how these changes actually would reflect into your business. So with we have Mr. Saurabh Goyal. He has over 18 years of experience in supply chain management, logistics, and automation, and he's currently the co-founder and CEO of Xindus, a company that provides Xindus OS, a cross-border trade execution and orchestration system for SMEs. Prior to Xindus, he was general manager at JSUDA International and the managing director there, where he was responsible for setting up the India business and expanding the business across Middle East and Africa regions. And now from the Razorpay side, we have Mr. Ankit Bandi. He's an extremely immersed banking professional with deep and immersive experience in handling and solutioning several cross-border payment facets like outward remittance, inward remittance, trade finance, export credit, amidst other facets. So a very, very warm welcome to all both of you. Thank you so much for being a part of the panel. I think we can begin the discussions now. And I'll drop a quick question to both of you. What is the single biggest change sellers need to understand about shipping to the US now? This is an open question to either of you.
So, Ankit, I'll go and then maybe you can add. Yeah. So, of course, tariffs as a headline level is a big change, right? I'll set quick context. In the US, there used to be historically what is known as a de minimis exemption, which means that for any shipments under $800 in value when you shipped into the US, it was duty free. There was no duty applied on that shipment. And this de minimis exemption in some ways was credited a lot with Shein and Temu, etc., growing over the last 3, 4, 5 years, right? Last year, almost 1.4 billion shipments came into the US via de minimis exemption, right? And so you're talking about $150 billion of trade coming into the US duty-free on de minimis. Of course, China, the largest shipper, but also significant volumes from Europe, from Canada, from Mexico, from a UK, and some volume starting to grow from India. Now, given all of this background, and of course, President Trump coming in, looking at tariffs and world trade a little differently than how previous administrations have looked at. 3-4 months ago, de minimis was first removed from China and Hong Kong. And therefore, what we are seeing today, this environment has already unfolded for China, Hong Kong 3-4 months ago. And probably it was done in a phased way so that US CBP, Customs and Border Protection, got the opportunity to build their systems, and all the volume would not move to this, sort of new way in one go, right? So this already happened for China and Hong Kong. So coming back to what changes, one, under $800 shipments also will have a duty applied. That is the first change. And the second change, of course, is that, in addition to the fact that duty will be applied, of course, the US government has announced reciprocal tariffs on different countries. And the reciprocal tariff for India is 25%. And the additional Russia oil tariff on India is 25%. So taking it to 50% as we come to August 27, 2028, 25% reciprocal tariff on India is already applicable. The additional 25% will become applicable. So if you're an e-commerce shipper shipping into the US, starting August 28, 29, whatever product you sell That product bases its category classification. There is a basic duty you have to pay, and then you have to pay 50% more, right? 50% of the product value as additional duty, not 50% of the duty as additional duty. You have to pay more, right? So principally, right, your duty on uh, all shipments into the US will probably end up between 50 to say 70%.
Um, Vishnu says not getting voice. Is that a problem with everybody?
I
No.
think I'm able to, yeah.
Yeah.
Yeah, I think Vishnu, it's a issue at your end. Sorry, you can continue.
So that's the big change that tariffs will apply, and there's a huge cost of doing business. But if I may take a minute more, Ankit, before you come in, uh, to apply tariff, a few other things now start happening, right? Because if you have to apply tariff to a shipment, you have to be able to classify it correctly. Cotton t-shirt and a silk t-shirt are different. Men and women are different. I don't know, maybe front opening and zippered is different. So classification is based on the description of the product. So you have to have accurate description. You have to classify it correctly. You have to apply the right duty basis the classification and then pay the duty. Till the time this was all under $800 and there was no duty, customs was not concerned about how you gave the description or how you classified it because there was no revenue loss. Now it is linked to revenue and therefore classification will have to be done correctly. And think about hundreds of thousands of shipments or hundreds of thousands or millions of shipments going every day. And they now all have to be classified correctly and accurately. This was not the case. So this is one sort of change. Second, from an India perspective, especially, a lot of products are FDA products, cosmetics, Ayurveda, food, etc. On low value shipments for the last 30 years, customs in the US would not enforce safety norms or product labeling or disclosure norms. They were waived off for low value shipments. Separately from this tariff change, FDA has now removed has started enforcing those norms as well. So for a lot of people who were shipping low value products into the US, could be toys, could be tea, could be Ayurveda, could be wellness, could be cosmetics, stuff like that. Essentially, now you need to have the same level of compliance as if you were doing a business shipment. So that is additional organization, documentation process that you need. So the tariffs under $800, high tariffs, classification, product compliance norms, and also because now you have to pay tariffs and duty, you need a you need an importer of record in the US who needs to represent you to customs and pay customs and duties on your behalf, because for a lot of people they will not have a legal entity in the US, and we can talk a little bit more, but many changes, Vishnupriya, and essentially, businesses will have to learn how to accommodate to this new world.
Thank you so much, Saurabh. Ankit, from your perspective, what do you think is a major change from a payments point of view?
I think Saurabh covered it well, and I think a lot of insight for me as well. But again, from a payment perspective, I think one thing which is the major shocker is basically the sudden squeeze in the margin, basically because the exporters usually consider, or the margin is basically getting reduced because of the increase in in the duty, and the lending cost is basically significantly impacted because of that. The second thing is basically because previously there is no component of duty which needs to be paid for these small value shipments. There is an additional compliance which needs to be now taken care, basically comes into picture, and then this cost of compliance will again hit in the margin, basically. So that will also impact. Additionally, a lot of traditional importers who are already importing these small value goods are used to basically a duty free or shipment, or they are not used to paying the duties additional to whatever amount they have ordered on. But going forward, whenever there is a shipment happening and there is an additional duty they need to pay, I think there might be chances of rejections of these shipments, or basically there can be chances of chargebacks or other such instances, which I think will impact the shipments a lot from a payments perspective. Again, basically, I think there are two components to it. One is if the payment or the duty is paid in Indian rupees through a shipper here, then again there is a conversion which comes into picture because the payment will go and will have to be settled overseas to the customs. So again, the FX cost and FX margins come into picture, which will again impact the margins, and then hence basically making it more and more difficult and complex.
Got it. Got it. Ankit, you speak about landed costs. So let's break down the immediate cost a little here. For example, I'm a seller and I'm shipping like a $30 product to the US. Saurabh, I think this question would be more targeted towards you. What would be my total landed cost? What would it look like, including freight, custom duties, brokerage, and last mile delivery?
Oh. So Vishnupriya, US CBP requires you to pay customs duty on what is called as FOB value, which is free on board, right? So essentially, what is FOB value? FOB value of a product is essentially the value which is the value between the buyer and seller at which the product has been traded, minus duties, freight, insurance, etc. Right? At the origin port at say time of loading, right? So that's FOB value, right? Now, in most B2B transactions, there is an invoice between buyer and seller, and that value can become the basis of FOB valuation, and therefore you would have a value, and you would just pay duty on that. So your cost of freight shipping to the US, last mile delivery would not go into FOB value. Of course, duty you are anyways paying on the product, so it is separate, right? And therefore, if you were selling something for $100 and your listed price on the marketplace was inclusive of duty and delivery, you would take those components out, and then pay duty on the FOB value, right? So this is the most simple example of how duty etc. will get added. What would be the duty? Typically, like we said, for each product, you will have to classify it anywhere between 0 to 20% duty. For different products, there is US has a harmonized tariff schedule where you can go and find the duty for a product, and then 50% plus if the 25 plus 25% tariffs remain. So that is what it will be. Freight costs today, whether it's a DHL or it's a Xindus, you have a cost of delivery door to door, so that cost will remain. And then because the nature of compliance on the US side has become a little more complex, earlier, shippers would not be used to these terms, but there are this thing like an MPF, a merchandise processing fee. So for low value shipments, the MPF per shipment is about $2.6 or something. So that will become an additional charge, which most merchants are not sort of used to seeing. If let's say someone is acting as an importer on record for you and taking on that risk and responsibility, they may charge you some value depending upon your commercial agreement with them, typically linked to the value of a product that they are taking fiscal responsibility for in some way. So that will be an additional charge. And then, like Ankit very rightly said, because now you have to pay duty and you have to collect duty and move it to the US and pay it, there would typically be a duty disbursement fee, because there's a cost of collecting and paying duty, and it is just a cost which is going to maybe Razorpay, because they will help us move the money around, right? But it'll go to some financial institution essentially, right? Is what I'm trying to say. It doesn't go to CBP, it doesn't go to the logistics company. It essentially is the cost of moving money around, right? So those are the costs that merchants will see going forward.
Got it. Thank you so much for that answer. I think the next question I would direct towards Ankit. Ankit, so do you think the payment gateway fees will increase because of this duty complexity?
So it is a good question, but I think it is very nascent at this time to comment on that, because we are yet to understand how the structure works, how the duty payment guidelines comes, and how the payment infrastructure will basically get set up. But definitely, from a basically, as I mentioned, that uh, from a settlement perspective and from addition to the compliances and all, I think definitely this will impact the overall payment infra, and hence basically there will be some impact for sure.
Got it. Understood. And also a side question on that is, can payment gateways like a Razor or a Stripe integrate duty collection into their checkout flow? Is that a possibility?
I think yes. Usually, basically, the payment gateways partner with a third-party service providers to calculate or enable the calculations of duty majorly, which helps the merchants to calculate the duty as per the shipment or HS code of the product, and also as per the geography or the location of the shipment. However, basically, if the payment gateway partners with the logistic partners, I think the logistic partners can enable the duty collections, or basically help payment gateways to enable the amount of duty which needs to be collected, and then basically with the joint effort, the duty can be collected and then settled to the end customs or the authorities.
Got it. Understood. And one marketplace related question would be like, if my, and this question is like an open question to either of you, that if my product costs, say, a $30, and but with duties, it becomes a $50 at delivery. How does this affect a seller's Amazon or Etsy commission calculations?
Yeah, I think so. Basically, as per my understanding, usually the marketplaces calculate the commissions on the value of the product plus the shipment. The duty is, anyways, currently also kept outside the calculation of the commission. So my understanding is this will not directly impact the commissions which the platforms charges. Just for an example, say a product is of say $30, and then the shipment charges of $5. Then usually the commission is charged on the $35, which is the total value of the product plus shipment. The duty is basically collected and paid separately, and hence it is not part of the commission.
Understood. So we have some questions coming in, and we will take a few questions before we move on to the next segment. Ayat, you can unmute and go ahead. Okay, I think we can take some questions on the comments. So 99 Store has a question. Do we need to pay duty for FBA product?
So you have to pay duty on everything. When you are sending a product into an FBA location, your value added or FOB value is likely to be a little different than if you have sold it directly to the end consumer. Because when you've sold it directly to an end consumer, the selling price is set at a different level. While when you move it via FBA, it is still going to go, more value is going to get added locally in the US before the final sale happens, right? So you will still have to pay duty. So product is the same, classification is the same, duty rate is the same. Just that in that case, where you have moved the product in bulk, the FOB value that you offer for duty could be established maybe differently depending upon the business model and documentation available. But yes, you have to pay duty.
Got it. I hope that answers your question. Mayank has a question. Are DDP services already available for smaller value shipments with carriers other than FedEx, DHL, etc.?
I can say for Xindus, we will sort of make this live, and we will give you both the options. We will give you the option of paying that duty to us while creating the shipment, and we will also give you the option of sending a payment link to the end consumer so that they can pay the duty separately, like Ankit said, in their country with a local payment method locally over there, right? So both the options in the DDP context will be available to sellers and shippers. And I'm sure other people will also enable this, given that this is an important thing.
Ganesh has a question. The duty charges are fixed, or it depends on the FOB value of the shipment?
FOB value. So it is linked to FOB value, and then it is, of course, right? So it is linked to FOB value. It is linked to what is the product, and for each product, the duty rate is different. So 50% is for all the products, right? And then there is a duty rate. So duty rate plus 50%. If I may add over here, the US has also brought out a list of exempt products. So, as an example, electronics in many categories, pharmaceuticals as of now. I was reading books, which a lot of people from India ship. These are some of the things which are exempt today. So, they will continue to not attract any tariff at all. So, one of the things you should do is see if your product is in the exempt list, right? That is one. Second, there are what is called as Section 232 tariffs for automotive, steel, copper, etc. These tariffs, in some cases, override reciprocal tariffs, and in some cases, get added to reciprocal tariffs. So you have to go and see. In certain cases, they may add up, and overall tariff level may go up, and in some cases, the Section 332 tariff applies independently. My understanding, and we can verify it product by product, and therefore, then that is what it is. So you have a base tariff, you have the country-specific tariff, you have exemptions, and then you have the Section 232 tariff. And for each product, your supply chain partner, your customs partner, your logistics partner will be able to help you understand that what is the effective duty that will come. I will give you another very interesting sort of point from an e-com perspective, and this is actually funny, right? Because a lot of sellers not only sell products from India, they sell products from China also, right? So when China tariffs went up, I think all Indian sellers were still disclosing the products as India origin and paying lower tariffs, right? Now today the tariffs from China are lower. So I think if you're selling a product which you bought from China and you're selling it into the US, you should disclose it as the China origin product. The tariffs will be lower. So that's one sort of small piece. The other interesting piece is, I know businesses who were sourcing from the US, who moved their supply chain to India, and now are going back to their US factories and saying, can you give me product locally? Because of course, right, tariffs are different. One other sort of piece that came up, in fact, one of our merchant partners, they import a lot of sub components from the US. And these tariffs have a special call out that the US content value is not subject to tariff. So let's say if you are doing a product, in 20 or 30% of the value of the product is coming in components or raw material which was imported from the US, then please disclose it. Make sure that your supply chain partner understands, and apparently you should be able to bring the overall duty or tariff level down.
Got it. I think those are some wonderful nuances, something we will also uh, shed some more light on towards the as session progresses. We have some more questions in the chat box, but I implore we take it towards the end of this section. I have some more questions for Ankit. Ankit, one persistent question that we constantly get is if customers have to pay duties separately, will their chargeback rates increase due to the sticker shock?
I think that is a right question. And as I mentioned earlier, basically at the time of ordering, say customer has ordered a product of say $30 or $50, but at the time of delivery, when he's asked for an additional $10 or a $20 as a duty, which needs to be paid, definitely there might be dissatisfaction at the customer's end, or he might think that the product has been missold to him with a what you can say not full transparency, while basically from a seller perspective, seller might be assuming that the customer who is ordering is already aware about that he has to pay the duty. But from an importer perspective, that can be a shocker or a basically a misleading from a seller. He think that the seller might have misleaded. Additionally, it might result into the negative ratings on the marketplace platforms as well, because some of these importers usually, if there is a misassumption, or basically they assume that the product should actually cost something, but the charges are something different, then they might give a negative review, and they might also return the products. So definitely, it might result into chargebacks. But I think the option or the best solution to that is either basically giving a full transparency, or I think the platforms like Amazon, eBay, they usually call out that the product is applicable to an additional duty and the duty to be paid by the importer. So if the similar disclaimer, if the exporter puts on their website or while making a shipment, I think that will help, and that will definitely make the transaction more transparent and basically reduce the chargeback.
Got it. Got it. I think we have a few questions on shipping. Um, and this is like a open question to either of you. A seller currently says that he ships 200 to 300 small packages monthly via CSB4. Can they continue this under new rules?
If I may, and Ankit, you can add. So my advice to everyone doing CSB4 shipping would be that they should not be doing CSB4 shipping anyways, right? Because independent of the US side, CSB4 as a clearance method is essentially for non-commercial shipments, samples, gifts, etc. It is a method in which you are not supposed to be receiving any money, and when you do shipping in CSB4, it creates other additional problems for you, because when the remittance comes, you will not be able to do your BRC closure, EDPMS closure, right? You will not have a shipping bill entry, commercial shipping bill entry to be able to do that, right? So whether you do CSB4 or CSB5 or you do cargo commercial clearance in India is completely unrelated to what is happening in the US. The US side changes have no impact on the India side. But as general guidance to any Indian sellers, you should actually not be doing CSB4.
Well, that's definitely the ideal practice.
Yeah.
And also, as a workaround, should sellers explore switching to India Post or USPS instead of private couriers? Will it be cheaper?
Well, it's complex. It's complex in the sense that if you see the declaration or the executive order that has come out, it says that postal departments do not have to pay tariff as a percentage, or they can decide whether they want to pay percentage or flat. But most postal departments do not have the technology and the process capability to pick up a shipment, classify it, put a tariff rate, calculate it and then pay. So most postal departments will choose to do the flat duty route. Now that flat duty is $80 per parcel uh, for the lowest tariff category countries. It is, I think, $120 per parcel for 15 to 30%. And above 30%, I think it is $180. So India, as we sit today, is $180 per parcel, right? Uh, in that context, and even if that 25% goes away, India is probably still in the $120 per parcel. It's a very high duty rate. And therefore, you're talking about potentially your duty rate being higher than using commercial methods. And also that means that it's a higher value shipment, and whether you would want to run it via post or not, it is a question that the seller would have to sort of think about. That's one. Secondly, this like we discussed, this de minimis exemption went away for China and Hong Kong about 3-4 months ago. In the last 3-4 months, China Post has not been able to move any commercial shipments at all, despite similar flat fee arrangement available to China Post. And the reason for that is that without going into too much detail, essentially this ability to collect duty and pay duty is not something which postal departments are used to doing. And they were not able to create the arrangement even at a China Post level. And therefore, they have not been able to do anything, right? Now, when this updated order for all the countries going into this new arrangement came, there was some relaxation on how postal departments can collect and pay duty. So I think all postal departments are relying on USPS as their counterpart in the US to help them find a way to pay these duties. But that is only one part. The other part, which is on the origin side, having the technology and the process to actually ask for the product description, actually ask for the uh, tariff number, get that right. And if it is a PG or an FDA tariff number, also be able to potentially run the product compliance process, not just the trade compliance process, in addition to the trade compliance process. So a lot of challenges in a very short period for postal departments to be able to move to this. We work with India Post, we work closely with them. And I know that they are working on it, and I'm hopeful that they will come up with an answer, but it's not an easy answer. Postal departments around the world are actually, as we speak, making announcements on how they will tackle this and whether they will be able to run shipments come August 29 or not.
Yeah, that makes sense.
I think additionally, Vishnupriya, that is what my understanding is, and Saurabh can comment on that. But what I understand is the private players currently already facilitate the duty collections, and they have the capability of duty collections and settlements. vis-a-vis the postal department, as Saurabh mentioned. So a lot of this flow is sorted from a private player's perspective vis-a-vis post perspective, while the shipment cost might be a bit lesser, but the overall hassle or basically overall overhead of compliance and doing multiple checks and balances again leads to the I think it leads to the same costing.
Got it.
You're right, Ankit, right? Private players for larger commercial shipments above $800, right, have already been running this flow of classification, assessment, duty collection, duty payment. In other countries like UK, the de minimis level is at a lower level, like 135 pounds. So more shipments hit that need even for e-commerce sort of shipments. So yes, you're right. Private players have more process and technology capability available to assist with this process today than say an India Post, and I'm sure they will evolve over a period of time.
Ankit, this brings us to the question, how will currency conversion work if duties are collected in USD, but the seller receives payments in INR? How do you look at that?
So I think it again depends on who is paying the duty. Say again, if the duty is paid by the importer and it is collected overseas, I think it doesn't change the current scenario because the duty will get collected in the foreign currency and the settlement to the customs or the authorities will anyways happen in a similar currency. And the exporter will receive the proceeds against the exports, which includes basically the cost of the product plus the shipment or additional charges which are added in the invoices. So from that perspective, I don't think it will make any difference. However, if the duties are getting collected in India and then basically settled overseas, or the merchant is basically paying the duty here and then the duties are paid overseas, then definitely the FX conversion and the cost of settling the duty, as Saurabh mentioned, will kick in, and someone has to bear those charges because there will be a separate remittance or someone will be basically doing this job of basically giving or depositing the duty to the authorities, and hence the cost will kick in for sure.
Yeah, and add to what Ankit said, essentially, right, there is a duty disbursement fee which is likely to come up. So of course, right, for a logistics company, even if they are going to collect the duty at destination and pay it, there is some administrative effort for collecting and paying that duty. If it is at origin and they have to pay at destination, there is a forex issue also. So there will be a duty disbursement fee, and that duty disbursement fee could be a little different depending upon whether they are collecting the whether the customer is paying them the duty at origin or at destination. And also I think partly maybe Ankit sort of mentioned it. Payment gateways potentially could collect the money, split the customs duty component paid to a local partner for payment, so it doesn't have to be repatriated or remitted to India, and that could potentially save. So you take $100, $20 is duty, you pay that $20 to the customs broker locally, bring the $80 back, and therefore I think more development could happen on the gateway side to collect and split and pay out.
Yeah.
Got it. And some super basic questions now that regulations have gone stringent. Does the seller need IEC and AD code for every shipment now, even via India Post?
So which it was always the case, right? IEC is needed to file to ship anything, and AD code is needed because once you get the money against that export, you have to go and reconcile that against the shipping bill, right? So different purposes. But if you are in the business of exports and you are going to make commercial shipments, and then you are going to receive money against that, you need an IEC and you need an AD code, and whether it is through a private player or through a posting, it is a need which was there earlier as well, and it is a need which will sort of continue to be there.
Got it. Just setting the record straight for everybody, even the uninitiated. We'll pause to take a few questions on the chat before we go to the next section, which is the marketplace section. Women has a question: will Xindus change last mile with USPS or continue as delivery partner, as Xindus has collected duty as GDP upfront?
I think our last mile partner choice is dependent on many factors around speed, weight, where we have to deliver. So I think, whoever will remain the last mile partner, number of last mile partners in the US, that will continue. But of course, right, if we have collected the duty upfront, we will remit it to USCBP at the point of clearance, and then the shipments will be handed to a USPS. If I may clarify, because the question may be coming from the fact that if we are using USPS as last mile partner, can we do a flat duty like a postal department? No, we cannot, because the clearance is being done as a commercial shipment and not as a postal shipment. Does not matter even if USPS is doing the last mile delivery if the shipment is moving on Xindus, right? That flat fee duty arrangement, $80, $120, $180, is only available if the shipment goes via India.
Vimal, I hope that answers your question. Vastraghar Fashion has a question. Does duty applied as per the shipment booking date or as per the custom clearance date? Is duty applied?
No, so duty is applicable generally on the date when you file for consumption, which is when you clear it. Of course, right, generally we do not have this environment where duties and tariffs are changing so quickly. Typically they are very stable, and that is why if you see many of these executive orders that have come out, they have created specific exemptions to shipments which may already be at sea or already be in transit, so that you are not penalized with a changed tariff if things have changed while you were en route, right? But in general, duty is applicable when you enter it for consumption, which means that you file for clearance. But because tariffs have been changing, all these executive orders have called out some periods where up to a certain number of days before, if shipment had already left the origin port, probably original duty will apply, and up to certain number of days maybe post the changeover date, that earlier duty rate is available for shipment which had started earlier, right? So that's the context, but otherwise it is very clear.
Got it, Saurabh. And also, I know you really discouraged sending out CSV4s, but here's a question on CSV5. Vishal has a question. If I send from the CSV5, Indian banks take very high charges and ship bill closing process is very tough. How can we send from CSV5?
So CSV5, and I'm sure maybe Ankit will also have something to add, but the government is working very hard to simplify this process, right? Two, there are banks today which have a more liberalized regime available, and cost per shipping bill they have brought down. Third, there are banks, and I will not take names, but who have built a very good trade portal, where in many cases you can use technology to do some of this filing and bring the cost down, and it's a more sort of friendlier interface. Fourth, from a Xindus perspective or from the perspective of logistics players like us, we also offer solutions like what we call as a BBX, where 50 or 100 shipments can be bunched together and filed together at origin, so that you only have to close shipping bill one time and not 100 times. So there is a cost side to it for the bank, with the bank as well, but also there is an administrative side to it, because you don't have to do 100 reconciliations, you only need to do one reconciliation, right? So across the ecosystem, I think a lot of recognition that the shipping bills and the effort and the cost doesn't help grow exports. And I would actually think that this situation will probably make the government go even faster on it to bring more relief to the community. And I'm quite sure that is likely to happen. It was already happening. Probably will happen even faster.
Yeah.
Yeah. Just to add to Saurabh, I think as he rightly mentioned, that there are a lot of reforms which has taken place, and even the regulator recognized that there is a challenge for a small value shipments because there is a lot of documentation which was there earlier, and the time and the cost involved in that. And the regulator also, I think, brought a circular or released a circular sometime back, where the small value shipments can be closed by the bank with the minimum documentation, or basis the comfort or the bona fide of the transaction, having the bank's comfort, and the bank can decide a policy as per their internal risk assessment and compliance, and then close it. And I think it got a fabulous response, and a lot of small value shipping bills got cleared, and hence the regulator has also extended these timelines for further period, so that they can actually help the merchants and the exporters to reduce the compliance burden on this, and they can focus on the core business as such.
Got it. Also, very quickly, just wanted to ask this, and it's an open question, right? Like, for example, if a seller has a question, my customer orders a $40 product, and then they get surprised at a $15 duty at delivery, and they refuse the package. So what happens next, both from a logistics point of view and a financial point of view?
Ankit, you want to go first?
So basically, see, I'll leave logistic point of view to Saurabh, but again, from a financial perspective, it has multiple challenges, because ideally the shipping bill is already open against that, and the bank or you expect the payment against that shipment. So there is again compliance burden which comes into this, because there is an open underlying bill which is against which is to be collected, or there should be a payment which needs to be received. And in case there's a rejection of that shipment, the shipment will definitely be either returned, or you have an option to sell it at a discounted price to the same importer, absorbing the duty amount. So it will either impact the overall ship. You have to bear the overall shipping charges in case of the returning of the parcel, and it's definitely a loss. On the other side, even if you absorb, then the margin will definitely skew, because for a small value shipment, already the margins are very less, and if the seller is bearing the margin, then it definitely will impact the overall receivables. Again, on the compliance side, the regulation, RBI current regulation says that the payment which needs to be received against the invoice, there can be a discount of maximum of 25%. So if this duty fees is more than 25%, and if the seller actually gives a discount of more than that, then in that case, the compliance burden again kicks in, because the bank asks for some additional clarifications, and there is the additional documentation which needs to be presented to the bank for getting this clarified. So that again, other complexities comes into picture. Yeah.
If I was to add, right? So, I mean, returns and sticker shock and certain surprises, right? Big question. Here, my advice to people would be that if you're running your own web store, as much as possible, offer the duty as part of the checkout, so that people have less surprise. Because eventually they have to pay it, and a smoother experience could lead to sort of more trust and lesser challenges. There could be potentially some conversion risk at checkout, because the cost has gone up, but probably that risk is lower than the risk of certain surprise later. So that's one. Two, whichever supply chain logistics partners you're using. So as an example, in the case of Xindus, we are enabling the capability where you will be able to send a payment link to the end consignee if the duty has not been collected at checkout. That payment link will be paid using local payment methods in whichever country you are. And what we will do is that we will hold the shipment in India till the duty is paid, so that there is no chance of a denial of shipment after sending it, and therefore some of the onwards issues that Ankit mentioned, gone, then rejected, what do we do, and reconciliation, those issues do not occur, right? So that is the second thing. And the third thing is that, at least at Xindus, what we do is we offer a global returns program. So let's say, and we done that program today as well. So if you deliver to an end consumer, say Ankit in the US, and he doesn't want a shipment and he returns it, it comes to a Xindus integrated return center in the US. A quality check is done, and if the product is good, then we fulfill the next order on that same product locally. So we cut your overall cost and your return cycle and a lot of the hassle around potentially dead inventory, etc. By just making that inventory useful for you, as if you were sort of selling locally, right? So multiple things that can be done, and you're right, to an extent, there could be a risk of, returns sort of going up. So you may have to think about handling returns even better. One related point to it, a little separate from what you're saying. Also, right, I think a lot of businesses, for some products, it may start making sense to actually deploy inventory in the US and sort of ship in bulk potentially, on a B2B sort of a model, bring it in, keep it locally, increase speed of fulfillment, potentially reduce the tariff impact as well. And therefore, I think sellers will also have to, in certain cases, do better segmentation of their portfolio of products, right? What should I ship locally? Which products can have price elasticity or where I can take the price up? Which products have predictable demand and therefore can I potentially deploy them locally? Of course, cost of fulfillment in the US is also very high. So, what is the minimum value of product at which local fulfillment makes sense? So many questions will come up, and I think everyone will have to sort of walk through them sort of piece by piece.
Got it, Saurabh. Thank you so much for that answer. We have some more questions on the chat, but we will take it up after this section, which is on workarounds and alternatives. We have touched upon this briefly. I will restate this question again. And we get this question in our community as well. So something very interesting to pick up. If a seller sets up a US subsidiary to assemble products locally, will they only pay tariffs on the imported components?
Absolutely right, because customs is now going to see only the imported components cross customs, right? Whatever did not cross customs is not known to customs, so they cannot apply tariff on it. You will cross customs with the imported components. You will classify those components, put a duty rate, and pay the duty. And one other thing which is interesting, depending upon what people are looking to do, is that if you actually sort of assembled something or brought something into the US, but then potentially maybe you sold it outside the US as well, you may be eligible for duty drawback. Now, depending upon whether you have that opportunity or not, you may not have to bear the cost of duty on products that went into the US but then went out, right? And just like in India also we have duty drawback, right? So I think while for the last 30-40 years everyone has been talking about lower and lower tariffs and freer and freer trade, now everyone is going to start learning about tariff engineering and duty management and global trade management, and hopefully they'll be able to do better because now technology is available to manage much of this for you. 40-50 years ago maybe it was not that good. So I think it's going to be an interesting time.
Interesting. And Ankit, one question to you that I wanted to ask was, how does affiliate marketing commission calculation work when duties impact conversion rates?
It's a very interesting point, right? It's a very interesting point. So if you look at US CBP valuation guidance, and maybe later I can share with you some of the links, right? And maybe you could share with other people. So there are very standard rules on how valuation happens. There is, of course, WCO, World Customs Organization, affiliated to WTO. So they have standard rules of how valuation has to be done. And then each country, in certain cases, through its own learning, may evolve those rules locally to an extent, right?
Yeah.
So the US CBP says that if you have paid some marketing spend or commission generally at a general level, right, which can be shown to be not directly linked to the sale, but is a cost to the sale that can be taken out of the before offering for FOB, right? Similarly, there is this question on marketplace commissions, right? That is a genuine question again, right? There also US CBP differentiates between seller commission and buyer commission. So the agent, was it deployed by the buyer, or was the agent deployed by the seller, right? And depending upon that, from the sales price, the commission could be deductible, right? But if you are going to do that, any of this, your documentation trail has to be very, very defensible and visible. In case tomorrow there is a hold, you should be able to justify why you did it. And also, of course, you have to do this in conjunction and declaration to your customs broker who's representing you and will be able to guide you that in your particular case, it is doable or not. So as an example, right, very clearly, if you were doing a B2B2C model, you had a US entity, you sold from India to the US, and then the US entity sold on the marketplace. Very clearly, the marketplace commission, maybe the performance marketing spend, etc., is no longer by any means part of the FOB value because all of that has happened after the product has got to the US. But if you were shipping from the US, depending upon your unique case, it could be considered as part of FOB or may not be considered as part of FOB. So there are sort of multiple pieces there, whether you're selling directly, you're going B2B2C, and so on and so forth. And how you set up agreements between different entities involved will also sort of play a role.
Got it. Ankit, you would like to add to that?
I think Saurabh covered it pretty well, and matlab, I think I agree to his point. Yeah.
Got it. Understood. We have some questions on the geopolitical landscape, but before that, would love to take some questions from the chat. Deepak asks, can we get a class on tariff engineering, like using first sale law in the US?
Well, that's an ask. Yeah, that's an ask. But I can say this, right? I can say this. One, I think we are going to launch a automated calculator where you'll be able to sort of go and put your product description, etc., and give you a fair amount of detail on duty, etc. Coming on to the first sale principle, so there is, as because sort of linked to B2B2C, and from China into the US, a lot of businesses over the last 3-4 months have moved to a B2B2C model and this first sale principle. So the first sale principle essentially says that if the first sale of the product has happened at the origin before the sale which brought the product into the US, then that first sale price can be used for FOB valuation. So think of a product, you are buying it from someone and you are selling that product into the US, and the first sale of the product without any change is in India, and then the second sale brings it into the US, then the first sale, if well documented, can be used as the FOB valuation. That is what the first sale principle says. What it also says is that you have to be able to explain and justify that this product was ordered only for the US and for nothing else. So there are some conditions and then rules on top of that, and that is why I said you have to set up business agreements and documentation to manage some of these things when you use a B2B2C model or use a B2B2C model uh, along with the first sale principle, etc. Right? Yeah.
And I think to add to this, I'm not sure, but from a compliance perspective, I think this comes under the merchanting trade where you buy something from a one location and then you ship it to the other location. So there are certain rules and regulations around that as well, where basically the second shipment value should always be greater than the first shipment value, and there should be a profit in that total transaction. There should not be a loss to the country in this complete transaction. And again, the time between the first shipment and the time between the second shipment, there is again a guidelines around those. So I think all those factors needs to be considered while taking these kind of shipments or basically taking a decision around this.
Got it. Kshitij has a very interesting question. Can you please put some more light on the thing country of origin, as in how it changes the tariffs?
So as an example, right? We discussed about it, right? So let's say you are buying some earpods from China, importing it into India, and then you were selling those on a marketplace in the US. Today, China tariffs are at about 30%. India tariffs are at 50%. So if you said that the country of origin for this product is China, 30% tariff would apply, even if the product was shipped from India, right? So that is one case where the product has pretty much sort of as is, was produced in a country, and then does not matter where it was shipped from, the country of origin does not change. Country of origin changes when the product substantially changes, and mostly substantial change means that its classification code has changed, right? And with some value addition locally, right? Because if it is the same classification code, basically, form, shape, factor has not changed, then it is pretty much the older product, right? So as long as it is the same product, does not matter where it was shipped from, country of origin will remain the country where the product had its most substantial in transformation, and that is where the tariff will apply from.
Got it.
So let's take another example, right? iPhones from India, right? Now maybe 70-80% of components are coming from China or Japan or Korea. Phone is being assembled in India. So from a value input perspective, probably the input value in India is low, but the final transformation is in India, and therefore country of origin is India.
Got it. I think that clears things up. Tushar has a question in a similar vein. I'll just state it out loud. We create personalized storybooks for kids with printing and binding done in the US and delivery within the US only. In this case, how would the duty charges and tariffs apply?
So if I understood it correctly, this is pretty much a local product, right? Because you are
Yes.
printing it locally in the US, you're selling it locally in the US, and therefore I do not see any context for tariff until unless, let's say, I don't know, there is some paper or packaging material you're shipping from India, and if that's the case, whatever is the applicable tariff on that, that may apply. If I have understood the question correctly.
I think that's the question. Yes. Yes. I think we can take some more questions later towards the end. Would request everyone to raise your hands. One very interesting comparison rather between countries. Definitely people would want to explore alternative markets now that US has levied tariffs. So one question that keeps coming is which other countries should sellers target? Like, for example, do Canada and Mexico still have favorable de minimis rules?
So, of course, right, different countries have different de minimis rules. So, Canada actually always has had a very low de minimis, about Canadian dollars, $20. I think the US, Mexico is about, I think, $50. Uh, you know, uh, the UK has 135 pounds, and Europe has $150. Now, in many cases, while duty applies above these thresholds, VAT, local VAT may apply below these thresholds also. So, it is not one number. You have to look at both VAT and BST duty. In many of the countries, given what is happening, there is increasing demand to do away with de minimis norms. So I think if you're looking as a e-commerce exporter today, you should broadly be thinking that globally de minimis exemptions or thresholds are going to keep coming down, because once this starts happening in one economy, and which is the largest economy, of course there is pressure in other economies to follow suit. Some of this is, of course, also driven by the rapid rise of, Shein, Temu, etc. In all of these countries, they have become very, very strong, poster boys, punching bags in some sense, and therefore, people believe that it will be a fairer fight if de minimis is sort of done away with, and so multiple things sort of driving it, right? So I think if you are a merchant, you should be building your view on assuming that compliance is going to be there, duty is going to be there, and then look at your product categories and the right markets for those product categories. Of course, right? Europe is a very large market, right? Compared to the US, our merchants don't do very well in Europe, just relatively. And I think they do not do very well in Europe because Europe traditionally had all of these barriers of IOSS and duty and product compliance, which US did not have. Now, US has the same barrier. So, in fact, if you ask me, I think this could be a very, in some ways, a blessing in disguise, because merchants will become used to being compliant, will used to sort of offering working around a more compliant regulated environment, and therefore probably markets which were difficult earlier will become more easier to access.
Got it. I think that explains a lot, and that basically gives the whole gist of how the geopolitical landscape looks like right now. Anshuman has a question in caps, in fact. I'm thoroughly confused and want to start the US. What would be the exact duty implications for apparel shipments for FBA? Anshuman, you're free to unmute yourself and speak to give more context into your business.
So we have an apparel business, largely in saris and handcrafted products, saris, lehengas, suits, etc. So now I want to do this Amazon this thing, and then I'm thoroughly confused because then actually pricing is one of the most key factor when you export, right? Because in India, if I sell at this, I will get this, right? Minus my. So now, unless, I mean, there are two ways. I'm looking at, okay, I do it and learn and see what comes to my bank, and then realize, okay, I'll book the losses. But in this, suppose if I do a shipment to FBA for them, and then suppose if I sell a good at $100, then what would be the exact, I mean, exact may not be the right term here, but what would be approximate bank transfer that I will get for that $100?
So, if I may try to answer the best that I can. See, so of course, right? Let's say this product sells via FBA in the US for $100. I'm assuming Amazon will deduct marketplace commission, any other spends that you have done prior to remitting money back to you, and that is what Amazon will remit to you, because any duty, etc., that you would have paid prior to the goods reaching to Amazon FBA because you would have delivered it to FBA, right? So let's say you want to sell something for $100. Let's for a minute assume the cost for you in India with some margin markup to say that it is fair value is $30. You ship it to the US. Uh, for the purpose of this conversation, let's assume 15% is the basic duty for that product. So 15% plus 50%, 65% on $30. Say $20, $50 becomes your price. Maybe $10 is your cost of shipping from India to the US. So $60 becomes your landed price in FBA. And then you sold it for $100, and I don't know, $20 or $30 is what Amazon charges you for marketplace, and your net spends per unit on marketing, etc. Right? So Amazon pays you back $70, sort of net in some ways, right? And you paid $60, so $10 is your realization, right? So to simplify or to sort of restate, because you are paying the duty when you are moving the goods from India to the US, Amazon is not going to, so Amazon is getting the products post duty, and you have already factored for that duty in your cost of goods, and you listed your sort of product accordingly, right? If that makes sense, Anshuman.
Yeah, so the duty will be calculated not on the price that I sell at, but at the cost that I.
Cost plus a little bit more. So fair value, right? So fair value of that product in India is FOB, right? If you were selling that product to someone in the US as a bulk B2B shipment, a third party, your invoice value would be the FOB, right? Your transaction value would become the value. But now when you are moving from India to the US, you are not selling to any unrelated party. So there is no invoice available to prove the value of this product. So this value has to be determined either by looking at your input costs or by showing your procurement cost plus some margin, or potentially working back from your selling costs and saying, here are your costs on the US side, and therefore this is a reasonable cost to offer for FB, right? You have to sort of, you can approach it from a deductive method, or you can approach it from a cost plus sort of method, right? But you're right. If you are going via FBA, duty is not going to be on the listed price, because that listed price, a lot of value addition on that product, which is fulfillment, marketing, etc., is happening when the products are in the US, right? Post the clearance.
Okay, got it.
Urvesh has one request. He says we would really need help from banks, RBI to accept some unreasonable gap between shipping bills and actual remittance if we can survive and sustain these tariffs/duties. You can be a voice for us and help us in getting this smoothened.
I think I can take it, Saurabh. So I think regulator also recognized this, and there are multiple forums in which this problem has been raised to the regulator. There is the recent FEMA guidelines or FEMA draft, which has been released by the regulator, in which they have already considered the capping of 25% reduction to remove that capping, and they are basically proposing to give the powers to the AD1 banks to basically decide on the discount on the invoice, which the banks can allow the exporters to collect the fees. However, this is currently a draft regulation and is under consideration. But yeah, the voice is already raised in multiple forums, and I think the regulator is well aware about this.
Got it. Also, that brings us to the question of financing, right, Ankit? Does bank give any trade finance product to finance these duty payments? Is something like that available right now?
I think yes, certain banks allow the duty basically financing, but it again depends on the mode of shipment. Basically, in many countries, there are such as example, I can talk about India, but in overseas countries like Singapore, UAE, EU, banks and non-financial institutions also offer custom duty financing or a short-term loan for the importers, basically. So the importers can take that loan and pay the duty, which actually helps the importers to make the payment and hence enable the payment of the shipment. On the other side, I think from an India perspective, I am not 100% having that visibility. If Saurabh, I think you can basically add to it.
So, Vishnu, we have a lot of products being built around helping uh, exporters in general and e-commerce exporters in specific, get trade finance. We are also working at Xindus with financial institutions to see how we can bring this workflow together, because a lot of data, for our merchant partners is available with us, and it becomes easier for the financial institution to look at that data and underwrite that risk. So whether you are building inventory and shipping, whether you are shipping and storing internationally, multiple challenges people have, right? Because many times you have PO financing. Now, in the e-commerce case, there is no PO because you own the inventory and you're putting it in an Amazon warehouse. So how do I get PO finance? Then there is inventory financing, right? Now, a local financial institution may say, hey, how will I get lien on the inventory if it's lying in the US, right? So how do I do inventory financing? So as we evolve as a country, newer products for this evolving business are being built. And I'm sure, right, marketplaces, supply chain partners, integrated partners, fintechs, different people will sort of approach it together and separately to solve for this. And it is happening as we speak.
Got it. I think we're already 8 minutes over time and we have many questions. I will allow the audience to unmute and speak. Mayank, you can go first. Unmute yourself, please.
Yeah, my question was a follow-up to the initial question I had about DDP. So, are we expecting to see these DDP solutions coming anytime soon, or should we actually put our stores on hold, so as to not get negative reviews on our various platforms that we sell? Because it seems unlikely that a solution is going to pop up well before the 29th. And if that is the case, if there is any perturbance or hindrance to any of those parcels for those of us that send 50 plus 60 plus 100 plus, we see potential negative reviews and worst case worst shop closures. So and there seems to be no clarity from carriers other than FedEx and DHL, who will have, as you stated earlier, the collection and advancement fees, etc., which will be a huge pile up to the existing charges that they already have. So unless you have like a very high average order value, a very large parcel that can justify those DHL FedEx costs, should we, for very small, those people who ship via India Post, Xindus, Ship Global, Ship Rocket, etc., should we, for the time being, put our shops on hold until a comprehensive solution is available to us?
Mayank, quickly, uh, you can do two things, right? One, of course, right? You can already at checkout either build up the cost of duty into the product, start selling so that it is built in. There is no sort of post checkout uh, duty handling story. Second, you can work with the right partner. Of course, you could come to us, and build checkout capability with landed cost, as an API. Ankit mentioned how, you need supply chain data to be able to do that, and then the payment can be collected. So that's there. But in the interim, on the 29th, what I would suggest is, as an immediate measure, potentially try and see if you add cost of duty. You can work with us. As an example, come to us, share your catalog. We'll broadly tell you what the duty rate is. You can increase your pricing so that you are collecting duty on that date. When you build shipments with Xindus, duty will be calculated. You will be able to pay the duty to us, and we'll be able to sort of, limit it on your behalf. So your business should hopefully not stop. And in
So you're
about,
saying this is starting the 29th, right, itself? Like if I
yes,
reach out to you today,
starting
you
29th,
have a DDP solution in place.
I have on 29th, I have a solution where
Right.
I can tell you when you create the shipment with me that this is the duty. I will collect the
Correct.
duty from you on the 29th. By around
Correct.
the 10th of September, I will have a solution where I can also send a payment link to your end buyer. So on
I
29th
understand.
of August, I do not have a payment link. On 10th of September, maybe I will have a payment link. But on 29th of August, I will have the
Correct.
capability to tell you while making the shipment that this is the duty.
Correct. Which you will also remit on my behalf if I
Yes,
should
yes, we will
choose
do
to
everything.
pay it to
We'll
you.
do everything. We'll collect it, and we'll remit it. We'll do the filing for you, everything.
That's great. Could you be able to share the contact details of somebody in like a chat or something at the end of this webinar that we can reach out to?
Sure, I mean, I'm sure we have a lot of people on the call. I'm sure we can put a connect over there.
Mayank, I'm doing that
Definitely.
for you.
Thank you.
Yeah. Yeah. Shweta, you can go ahead.
Hi. I'm founder of a B2B platform and are now exploring a B2C platform in this space, for which, of course, the de minimis rule was critical, but now we are reevaluating the entire business plan. So, anyhow, what I wanted to ask was that, as I understand, the duties are applicable on the product value, right? And usually, our customers like to see an end-to-end value, so we used to usually charge them a amount which included the freight. So do you now suggest that we separate out the product cost and the freight cost as part of the final bill that we send to them? And how much of mix is acceptable? For example, if I'm charging 100 USD, can I put $40 as the product charge, $60 as freight, or how do you suggest?
So, whether you include the freight and duty in the final cost or not, does not make a difference, because freight is anyways not, duty is not chargeable on freight. So you could break it separately, you could keep it together. Even if you keep it together while filing for duty, we can separate it out and say this is a delivered cost, and it should not make any difference on the tariff side. With regards to whether you should say it is $40 or $50, really depends on what is a defensible price with right documentation available, right? Because there is no sort of thumb rule. You could be in a business where you have 80% gross margin, or you could be in a business where you have a 20% gross margin, and these are very different sort of businesses, right? In that sense, right? So again, right? If you are doing a D2C transaction, if you're doing a D2C transaction, how FOB value, the sale value is the value between you and the end buyer, and like we discussed in the beginning of this call, right? Of course, duty can go out, freight can go out, and then there are spends like maybe marketplace commission and performance marketing. Some of them in certain cases are deductible from value for FOB value is calculated. In certain cases, they are not deductible, right? If you are doing a B2B transaction, very clearly all of those costs are incurred after you reach the US, and therefore the FOB value is a little different value, right? So coming back to your question, there is no single rule to say whether it should be $40 or $50 or $30. What I can say as a generic sort of rule is that if you were to run this as a B2B2C sort of model with the right structure, right data, right documentation, overall tariff impact is likely to be lower compared to a direct B2C model.
Which means having a B2B, which means having a business entity in US, right?
Having a business entity in the US is good. Also, but we're late, but still sort of, as a small point, see, if you have a business entity in the US and, that is a related entity, because it is your entity in the US, transaction value between you and that entity does not count as a verifiable value. We have to have independent data to say that this value is reasonable, because you could bill it at $10 just to show it is $10, but we have to have data to say that it is actually $10.
Okay. Got it. Thank you.
I love the fact that we have so much traction now. We have 10 plus questions and we're already 15 minutes over time. So it's definitely a super topical subject. But in the interest of time, we'll be taking just 2-3 more questions and wrap it up. And as a follow-up, we will be circulating a Google form to you, and you can put in your questions and we will let our experts know who can get their answers then async. So Mayank, I think, has already gone. Natasha, you can go ahead, please. Natasha, are you there? I think if not, we can go with Deepak.
Hi, so I have this question. If I keep my goods in the FBA warehouse and I make my Shopify website, I fulfill my Shopify orders through the goods stored at the US FBA warehouse, and I get the payments from Shopify to, let's say, my Skydo account. In that case, will I be able to reconcile the payments received from my Shopify sale with the shipment that I sent at the FBA warehouse? I came across someone in a group who said that they took out a circular which now permits it, but I was unable to find it. So I would love to hear your thoughts on it. Is that possible?
In my mind, there is no challenge at all, Deepak, in doing this, because essentially, right, when you move the inventory from India to the US, it's really inventory which is still owned by you, but it is consigned to a warehouse in the US, regardless of whether it sells on Amazon or it sells on Walmart or it sells on Shopify. Of course, right? I know there's a BRC reconciliation and who's sending the payment also. All of that is possible to create. And to my mind, there may be an RBI circular which may have come out, but people have been using Amazon MCF even otherwise, right? So it is something which works.
Okay, so I don't need to do anything special. I just need to go to my bank and just tell them that even
You
I
just need
sent
to
it
be
down.
aware of yeah, align with them upfront. Because so you will of course be getting payments via different channels. You will be filing a shipping bill, uh, showing an importer on record in the US when you file it. At the time you ship from India, you may not be fully aware how much is going to come from Shopify, how much is going to come from Amazon. So, we create interesting rules in India and then we find interesting ways to solve for them. But it is solvable. People are doing it.
Okay, got it. Thank you.
Just one more question. And since, yeah, Vivek, you can go ahead, please. Vivek?
Hello.
Yeah, you there.
Yeah, I just want to confirm uh, the tariff is going to be on the invoiced value or on the sale value.
So the duty is on the FOB value, right? The duty is on the FOB value. That FOB value uh, has to be determined depending upon the transaction, right? A B2B transaction with an independent third party, pretty much the invoice value is FOB. A B2B transaction between you and your own entity in the US or a related entity, you would have to show more documentation to show that you have determined the value correctly and you are not under invoicing for reducing the duty, right? It has to be defensible value. Principally, right? FOB value is the value at which that product is available sort of freely at origin country, right? One of the other things people speak about is, if let's say you have a wholesale price list and you've shown that in a bundled manner that, transaction is happening at that wholesale price, that can become a basis of saying this is an FOB value. These are all, part of WCA sort of, valuation norms, right? And then if you have done a D2C transaction, right, directly, right, then you can take the duty out, you can take the freight out because it is FOB, not CIF, and some other charges may be deductible. But clearly, right, the FOB value will be a higher value in that model compared to if you are shipping it as a bulk sort of product from India to the US and then doing a local sale there.
Okay. Thank you.
Awesome. Thank you so much. I am so sorry. Of time we would not be taking any more questions, but would request everyone to send in your questions and or email your questions. I'll drop my email ID. You can drop it there, and I will let the experts know. As a sign-off note, Saurabh and Ankit, I would love to understand. I think everybody on the call would love to understand from you that looking ahead, 6 to 12 months. I know each day is a new day in the world of exports, but looking ahead, what should sellers be preparing for? And right, everybody is planning right now. What is the top 2 or the top 3 should you feel that they should be keeping in mind? Both of you, I mean, Saurabh and Ankit there.
Ankit, go ahead, please.
Yeah, so I think as Saurabh mentioned earlier as well, I think 2, 3 points to keep in mind. One is basically you classify your commodity or the product into correct category, which will basically result into a proper classification and better customs clearance. Because previously, as Saurabh mentioned, all these small value shipments were not basically taken into, or HS codes were not basically checked so diligently. But now everything will be getting scrutinized in a proper way, and then basically if there is a mismatch in the same, then it might result into certain issues. Similarly, I think the second point, I think, which we discussed and which came out multiple times was giving a full visibility of the duty or the total overall cost to the buyer, which will definitely make the overall cost of the product clear, and hence reduce the returns or chargeback or basically rejection of the shipments.
I can say, Vishpi, I can say that just use more technology, right? Because with the way business is going, right, I think for a lot of people, when we start business, you know we think of technology as a cost. I think today it is not necessarily the case. Cost of technology is also going up and going down, and the value it delivers, especially in an environment like this where you want to work across markets, etc. Without technology is going to be difficult, and not just and especially given regulation, given product compliance, given trade compliance, all of those things, uh, technology essentially helps you do it. So the way I think about it, let's say you're someone new who started doing exports from India to US or Europe, right? You may have 6, 8, 10, 12, 15 months of learning to say, okay, here are 20 things I need to do. A good technology integrated solution will get you there in 15 days because it will ask you to do those 10 things.
Yeah.
Right. So you just accelerate your learning and you're able to do so much more. So that's one thing I will sort of ask everyone to do for sure. Second, think of this as an opportunity which allows you to get more globally like global standards, right? I'm not saying our products are not global standard, but just allows us to have the right documentation, the right packaging, the right data to be able to participate in more markets. And that ease of doing business in the US, which probably has meant that we have not gone and explored other markets. US is a big market, of course. We have to, as a country, we have to continue sort of participating there and winning there. And I'm hoping that things will sort of pan out right. But you will just be able to use this opportunity to go and do so much more. And third, just sort of linked to that, given the volatile world, that we are seeing, don't be just reliant on one marketplace or one country. Make sure that you are sort of solving beyond that.
Absolutely. As they say, every dark cloud has a silver lining. So I think that is pretty
Fine.
much, that's pretty much what it is. I would have to regretfully pause this session here because we are 5:23. That's 23 minutes extra. Folks still have a lot of questions. We can do a part 2 to this very soon and maybe get all the leftover questions answered. I had a couple of questions that I wanted to ask about AI and how we can use it, but unfortunately did not have a lot of time to ask that. Thank you so much, experts. This was absolutely lovely. I learned a thing or two today. I was absolutely in the sea when it came to US tariffs, but I think I have learned a thing or two. Would love, I think this is for the first time Rise has done something like this, decoding such a complex topic, which by no means is easy to understand. Thank you for doing a wonderful job breaking this down for us. Would love for everyone, if you can, to switch on your videos. You have to take one quick picture just to memorabilize this moment. Yes, I see some lovely faces. Thank you so much for switching your videos on. Yeah, I'll quickly take a photo. I'll say 3, 2, 1, and everybody smiles. That's the go-to. 3, 2, 1. Awesome, thank you. We have a photo. Yeah, as a sign off, I'm putting my email here on the chat. You can drop me your questions. Separately, I will have your email IDs. I will drop a Google form to you. You can put in your questions there. We will take it to our experts. We will even have a follow-up session. Should the questions be too overwhelming and we feel that warrants a second session, we'll set that up for you soon. Thank you so much. Any parting notes, words? Would love to hear from you.
I think great time, and Vishnu, you've been a great moderator as well, helping us string this together. And again, right, to everyone on the call, right, if you need support, and we know this is a time where you need support because there's just so much uncertainty, just reach out to us. Go to our website. I'm sure Vishnu Priya will be able to share a contact ID for us as well. But just reach out to us, and even if you don't do business with us, reach out to us. We're happy to support.
Thanks everyone.
Thank you so much. Have a great day. Bye.
Thank you.